Welcome to the Wealth Wisdom, where knowledge becomes power and power builds your future.
Imagine a world where computers don't just follow instructions, they think in parallel. Where problems that would take today's supercomputers thousands of years to solve could be done in minutes. Sounds like sci-fi, right? Well, welcome to the future of quantum computing. This is the technology that could redefine industries from finance to pharmaceuticals, logistics to cryptography. And right now, billionaires on Wall Street are placing some of the biggest bets you've ever seen on one company. In this space, today, we're breaking down exactly why and what it could mean for the market and maybe even your portfolio. But before we get started, let's get something straight. I'm not telling you to buy or sell anything. This is purely commentary and analysis. Stocks like this are high-risk, high-reward plays, and you should always do your own research. Welcome to Money Mind Finance. If you're new here, we break down the biggest stories in tech, finance, and innovation, and everything stock news related, in a way that's fun, easy to follow, and worth your time. Before we dive in, please take a second to hit the like button, share it with your friends, and also subscribe. Please help this video reach at least 500 likes. It really supports the channel and helps us keep bringing you the latest market insights. Thank you. Now, when a group of billionaires starts loading up on a stock, it's worth paying attention. Why? Because these aren't casual investors. They run massive hedge funds with millions, sometimes billions, under management. And while they might not be trading this stock daily, their decisions often signal a much bigger story. So what caught their eye? A quantum computing stock that has exploded over the past year, up more than 2,600%. Yes, you heard that right. Over 2,600%. That's not just a number. It's a signal that something extraordinary is happening. So let's back up for a second. Why all this hype around quantum computing? Traditional computers, the ones we all use, are built on bits, ones and zeros. They process information step by step. Quantum computers use qubits, which can exist in multiple states at once. Think of it like being in two places at the same time. This superposition allows quantum machines to process enormous amounts of data simultaneously. So while today's computers are like reading a book one page at a time, quantum computers can read every page at once and find the answer almost instantly. And here's the kicker. The company we're talking about today takes a different approach from the rest of the sector. They don't just build gate-based quantum computers, which are the industry standard. They also use something called quantum annealing. Quantum annealing focuses on solving very specific, complex optimization problems efficiently. It's easier to scale with more qubits, and more qubits means more raw power. But manipulating those qubits is tricky. We're talking about D-wave computing, ticker symbol QBTS. Some experts worry that this method could eventually be phased out in favor of fully gate-based systems. Doug Finker from Global Quantum Intelligence put it best. D-wave offering both approaches gives customers flexibility, but the future may favor gate-based systems once error correction improves. Either way, the company has made serious progress. So much progress that its stock has soared more than 3,400% in the past year. That kind of growth catches billionaire attention fast. In the second quarter, we saw some major moves. Paul Tudor Jones Fund, Tudor Investment Corp., purchased over 827,000 shares. Ken Griffin's Citadel Advisors bought more than 84,000 shares. Israel Englander's Millennium Management increased its position by nearly 950%, now holding over 380,000 shares. These are serious allocations from some of the smartest money on Wall Street. But keep this in mind. Hedge funds often have shorter time horizons. They might be betting on momentum, near-term catalysts, or sector excitement, not necessarily long-term fundamentals. So why now? Part of the story is timing. In a previous video, I mentioned that JPMorgan Chase recently announced billions in equity and venture investments into sectors critical to national economic security, and they explicitly mentioned quantum technologies. That's not just hype. That's institutional validation. D-Wave now has a market cap of about $10.8 billion. But its quarterly revenue was only around $3.1 million, with losses exceeding $160 million. Translation: this is a bet on the future commercialization of quantum computing. If they succeed, the upside could be massive. If they don't, this stock could correct sharply. So let's break down their financials, because this is where things get interesting. In the first half of fiscal 2025, D-Wave generated $18.1 million in revenue, up nearly 190% from the prior year. That kind of growth signals real demand. Customers aren't just testing the tech, they're paying for it. In a speculative sector like quantum computing, this matters a lot, but revenue is still small. So investors are betting on scaling potential, not current size. Bookings came in at $2.9 million, down slightly year over year. That is not necessarily a red flag. It could be timing or delayed large contracts, but it has something to watch. Now here's where it gets impressive. GAAP gross profit jumped to $15.9 million, driven by higher margin quantum annealing system sales. Gross margins reached nearly 88%, up dramatically from last year. That's extremely healthy for a tech hardware company. Non-GAAP gross margins were even higher, nearly 90%. This tells investors that the core technology is starting to deliver real economic value. Operating expenses are rising, mainly due to R&D, hiring, and marketing, which is expected at this stage. And while headline losses look massive, most of that is driven by non-cash accounting adjustments. Adjusted net losses remained relatively stable year over year. The takeaway: high gross margins, explosive revenue growth, and controlled adjusted losses. That's why smart money is paying attention. But let's be clear, this stock is speculative. Quantum computing is a long-term game with real volatility. Hedge funds may be riding momentum, but long-term success depends on execution, adoption, and continued breakthroughs. Still, this is the frontier. Early investors in quantum computing could see the kind of growth that reshapes entire industries. Think Amazon in the 1990s. Think Nvidia before the AI boom. The billionaires piling in today are signaling one thing: the future is quantum. So what should you take away? First, understand the opportunity, but respect the risk. Second, watch what smart money is doing, but always do your own homework. Third, track revenue growth, margins, and R&D spending. That's where the real story lives. If you found this breakdown valuable, hit the like button. Share it with someone who loves tech and finance, and subscribe for more insights like this. I'll keep breaking down the complex, high-tech, sometimes mind-bending world of investing into clear, actionable commentary you can actually understand. Remember, the future of computing is quantum. And some of the world's most powerful investors are already on board. The question is, are you paying attention? Thank you for watching.